So today we're going to go through disbursements. Last week we covered off elements and transaction types, and we briefly touched on disbursements. Our focus for this session is expanding on that and looking at the potential configurations and the flow of a loan that involves transactions with disbursements and with some examples of common occurrences. For those that aren't familiar with the concept of disbursements or how they apply within FinPower Connect, I will cover off an explanation of both. Unless you've worked in an end user role in a settlements team or at a law firm in charge of controlling the flow of transactions to multiple places involved in a house purchase, or have seen this area in use within a client database already, you may not be overly familiar with the term. The word disbursement in the context of finance translates to the payment of money from a fund, or the act of paying out money, especially from an amount that has been collected for a particular purpose. While it may seem strange that I'm reading you a dictionary definition, I believe it helps with the overall in the understanding of the concept and in giving further context. Often these will be known as transactions on settlement and involve one total loan advance or an approved amount, with the funds being split or dispersed to different recipients. A couple of fairly typical examples of disbursements would be example A, purchasing a vehicle involving a funder, dealer, and commissions. And example B, debt consolidation, where payout to multiple parties and things may be required. So how do we facilitate this in FinPower Connect? First and foremost, you must be licensed for advanced external parties and its prerequisite external parties. In its simplest form, the Disbursements add-on is used to distribute the loan advance, but FinPower Connect goes much further than just that simple functionality. Disbursements can facilitate paying out the proceeds of a loan to multiple parties by direct credit. This is useful if you're consolidating debt for a client and paying out a number of other finance companies and banks, etc. Paying out specific costs directly associated with the loan, for example, legal fees. Specifying the payment date of a distribution being made from the loan, which is useful for commissions that may be paid after 60 days, as an example. Account for the transactions where the loan is for an internal sale, in-house financing, and fees where no money is physically changing hands. Accurately handle internal refinancing transactions. Highlight any variances in the amount advanced and distributions made. Trigger direct debits where money is to be recovered or clawed back from other parties, for example, commission clawbacks. And the use of disbursement accounts themselves. This is regularly used for third parties. So, for example, a dealer may write 30 loans in a week and earn commission on them, but the physical transaction to the dealer for the commission might be paid out on the 20th of the month. So the disbursement account itself receives the incoming commission disbursements from the loans and then creates a payout transaction of its own to total and send the funds, as well as a remittance advice document showing the breakdown of the total amount. So essentially, disbursements are designed to ease many of the processing hassles associated with the advancing of a new loan. It has a full audit trail and the ability to set permissions in order to control who has the ability to approve and process disbursement payments. This then allows control and, when configured correctly, ensures that the user preparing the loan may not be the same person paying out the funds of the loan. We can have a look at some end-to-end processing using a couple of loan examples in a dealer disbursement account. So we'll start off by showing this example here, showing the disbursements that get created as part of adding a new loan. So if we look at the normal transactions page first, we can see here that we've got the loan advance, a trade-in, an establishment fee, an insurance premium, etc., etc. If we look at the disbursements page, we can see we've got the initial payout, the disbursement to the insurance company, the payout to another lender, and all of the commissions here. These commissions were created automatically based on our configuration, which we'll go through in due course. This example here is another one where we've got a debt consolidation example showing that on the transactions page you've got the one loan advance, the fee and an insurance premium, whereas on our disbursements page you can see the full real world, if you were, breakdown of how that's going to go. So we've got 15 going to BNZ personal loans, one to Visa and another one to the client direct, and insurance and the commissions. Now you'll see there's a different status here, and this is how the approval part comes in. So this one's already set to pending, that one's just going to go, but in order for these other ones to go they must first be approved. No. So that's as simple as highlighting the line and hitting that approve button. You can do this at the account level, or there's a wizard that we'll go through shortly. Now, to get all this configured, there's several areas that must be set up. So we'll have a quick look at that now. So the first is the element type. So typically there can be 3 elements involved for the one original transaction. One for the client related transaction, i.e. this one here of loan advance, one to handle the dispersing of that part of the transaction, and one to cater for any commissions payable. So we've got 3 examples here of ADV, XP, OEP and XCOMF. On the advance element, we can see it has the element type here of advance. When we navigate to the disbursements page, we can see it's got a disbursement type here of payout, and this is where that element here is linked. From there are some defaults that can be set to be defined when this element is used, such as the default payee type, which in this case we have set to dealer, and you can choose to define a default external party, whether you allow the payee to be overridden or whether you choose to consolidate disbursements. And finally, next is the disbursement value defaults, including a basis, which is dependent on the role of the element. In this case, our basis is full for the loan advance. And finally, the element to be attached for the commission. Looking at XP OEP, on the general page here, we can see that its underlying type is disbursement. And the options on the disbursement page are different. We can choose to set the defaults here for the payee type. For example, if your client is a finance company that deal with many dealers, it may be common practice to advance the funds to the dealer directly, especially where there is a vehicle purchase involved. And in that situation, it may be useful to default the payee type to dealer. And finally, the XCOMF, which again has an element type of disbursement, and you can choose default payment type, so this is not typically necessary, which we'll cover off in a few moments. So next are the external party options. Here you can define the disbursement information for the external parties involved in receiving payments, commissions or other, like this insurance example. On the options page is the definition of the actual disbursement account record and the terms which will set the default due date for the disbursements if required, and to review the set disbursements as pending, which don't require approval, and when creating default disbursements. There may be some examples, as mentioned, where you do want to just set it straight away to pending. However, just note that they don't need to be approved if you do that. Looking at our other example here of top-down motors, we can see the commissions page. Now this is only available for dealer and broker type external parties. And here we can see some example commissions loaded for the loan advance, the establishment fee and insurance. Up here, a commission account must be defined for them to be paid. You can also define a recovery account. However, it's optional. If not defined by default, the commission account will be used. The terms, again, this defines the default date due on the commission disbursement. In other words, when the dealer or broker will be paid for their commission. In our example here, we don't have, but we can have the 20th of the month set. This date can be overridden if necessary when adding as part of the new account wizard. Looking further at the commission rules, these are where you can set what happens for different instances. The examples we have here show that on the loan advance, Toptown would receive 7.5% of the present value amount financed, a set value of $50 for the establishment fee, and 15% of the value for any insurance element added. It is simple to add new ones. You simply go into edit mode and click the add button down here and choose the desired options through this little wizard here, like the basis, the element to attach, any relevant account types or promotions, and whether to always pay or not. Disbursement accounts. So as touched on before, this is where things like the commissions are handled. So after a loan is created, the disbursements are created and sent to the disbursement account record to be awaiting processing. Looking at Toptown here, we can see the list of relevant transactions created and to be received by Toptown. Once these have been processed, they'll change to say remitted and disappear from the grid unless you tick this little box here. You can see some old ones that are already processed, and a document is generated that looks like this. This summarizes all the transactions included in the payment that they have received, as I mentioned before. Clawbacks also come from disbursement accounts, either this one or the designated recovery account as mentioned, and can be used to create direct debits if necessary, or will simply be deducted from the balance if the next lot of commissions has not yet been paid. Approving disbursements. Disbursements can either be approved at the individual account level, as I showed you before, or via the transactions menu, where there is a wizard available to review in bulk any disbursements that are awaiting approval. You can choose different options depending on what the user needs to approve. For example, you may have a different user reviewing broker commissions versus transactions going out to a client or other lenders as part of a settlement, so could choose not to select anything other than account for payee type or unselect commissions and recoveries. Next, there are further filtering options available before we get to our grid of disbursements awaiting approval. Here the user can review the amount, who the payment is going to, and if the payee type is account, they can review the bank account where the payment is going to make sure it is correct. Then they simply select the items they wish to include and click the Approve button. If we refresh our grid here, they should, oh, there's a bunch that are still, oh, oops, helps if you tick them, Caroline. It's going well today, guys. That's better. Processing disbursements. Once a disbursement has been approved, it goes into the pending status, similar to the way direct debits do. They then need to be processed, and from there the relevant bank transaction is triggered and it will be included in the next bank transactions export to enable the real world payment to take place once the file has been uploaded to the client's bank account. So that's all I have to cover for our session today. As always, if there's any additional information you seek, please don't hesitate to contact application support for user interface queries or code support in relation to code-specific questions. As with this area in particular, there's many scripting events available throughout the many processes involved with accounts that can be utilised for custom requirements. In our next session, our code team will be running through user data or user defined from a coding perspective.